So this is a question that I get asked constantly, and now we're going to answer it. So I'd like you to imagine that you're standing on a beach at low tide. Water is calm, the sand is wide, and your house sits safely above the shoreline. That house is your mortgage, fixed, unmoving, the same height every single day. Now, I want you to imagine that the tide begins to rise, slowly at first, and then faster. And the water represents the financial system, the debt, the money printing, the deficits, the interest payments, the currency debate. It's really simple. Your house doesn't move, but the water does. So the question is, how much gold do I need to pay off my mortgage? Because the government has a plan to repay their debts with, in this country, dollars that have less and less and less value, and we can use that same strategy. So let's start with the core of the sound money strategy, because a mortgage is a fiat promise, but gold is actually real sound money, one that can be created at will, and the other, well, it's finite, scarce, and outside the system. So the real question isn't how do I pay off my mortgage? It's how do I use sound money to eliminate a fixed rate fiat debt? Because when gold rises to its true fundamental value, and that's one guarantee that I could totally give you, the value that's really implied by global debt and collapsing currency strength, the number of ounces required to wipe out a mortgage doesn't go up, it goes down, and fast. And that's what I'm going to show you today. So this is the mortgage balance sheet that we're working with. You can plug in your own numbers, but for today's example, we're going to use an $850,000 mortgage. And the question is simple. How can gold, a finite monetary metal, pay off a fixed rate fiat mortgage? And to answer that, we need to understand what gold actually is worth when it's not being suppressed by derivatives, leverage, and synthetic made up supply. So we're going to go to the fundamental value of gold. And this is how you get that. I mean, it's really quite simple. Again, we talk about the amount of debt that there is. Now, this is just in the world. So according to the IIF, there's $324 trillion worth of debt in the world that we're talking about. But there's also a finite amount of gold. That, if you divide all the debt by all the gold, that means that the true fundamental value of 1 ounce of gold at this moment in time is over $36,000. In today's markets, it's somewhere around, on the fiat markets, it's $5,000. So can you see how paying off your mortgage with gold could happen? Because with gold, there is, like I said, a finite amount of it, and they're not making more. Gold is the only money that has never been created by humans. At the same time, you have 33 different users of physical gold. So there is a finite amount of gold with the broadest base of buyer. That's why I can guarantee you, one of the reasons why I can guarantee you that it will go to fundamental value. But how much mortgage and gold calculation? Let's take a look at that. If your current mortgage debt is, say, $850,000, and gold were to go to fundamental value today, because remember, the more debt they grow, the higher that number goes, then that would take you 23.53 ounces of gold to pay that mortgage off. Here's the entire above ground stock of gold, all the gold humanity has ever mined compared to a single house. And next to it, you see the 33 categories of gold users: central banks, jewelry, technology, ETFs, investors, institutions, sovereign wealth funds, and more. That's just what I could think of. And this is the key point. Gold is finite. The user base is finite, but could grow as well. Everyone wants it, but only a tiny amount of it exists. And that's why gold's true value is so much higher than the price you see on a screen, that spot price. So let's go back to how you get this. Using the global fundamental value of gold to pay off that $850,000 mortgage, let's apply the global fundamental value to your mortgage example. At the true monetary value of gold, forget that spot price. It takes just 23.53 ounces of gold to pay off that mortgage. That's it. This is the power of holding real money against a fixed fiat liability. The liability stays the same. The purchasing power of gold rises to meet that reality. And let me tell you, this is just at the moment, because in this slide you can see in the US sitting at $38.4 trillion year over year. Plus, look at that daily growth. That's over almost $72,000 per second in growth debt. This is not a stable system. This is a system that's accelerating toward a mathematical wall. And when debt grows faster than the economy, faster than the tax revenue, and faster than interest payments can be made, quite honestly, something has to give. This chart shows the explosion of U.S. interest payments on that debt. Do you see how that is exponential? And it's now one of the largest line items on the federal budget, larger than defense, larger than Medicare, and larger than most discretionary spending. Frankly, this is the definition of a debt spiral. And historically, debt spirals end in one of two ways: default or overnight devaluation. And quite frankly, gold is the hedge against both. So I'm kind of curious, and I thought, well, I'm doing it typically on a global basis, but what would the U.S. have to do to deal with all their debts? Because I'm sure that you've heard, just like I have, that, every government has a gold revaluation account. At these current prices, that could deal. No, that's not the way that it works. Gold moves to its fundamental value to deal with all of that debt. So let's calculate the U.S. fundamental value of gold. Not global, which we just did, but just the U.S. debt divided by what we say we have in gold reserves. I'm not even talking unfunded liabilities or derivatives or anything else, just that simple math. Because when you do it, the implied value of gold is dramatically higher than the spot price, $146,800. And these are numbers that the government is giving to us, so we can assume that they're accurate, but they're also very, very conservative. This is the number policymakers look at when they really talk about revaluation, not the spot number. This is the number that, if they did it today, restores solvency without austerity. I mean, it's very painful for people, but that's the way they do these revaluations and why they do it. So now we take the U.S. fundamental value of gold and we apply it to that same $850,000 mortgage. And what do we get? If we're only using the U.S. fundamental value, not global, the number of ounces needed to pay off an $850,000 mortgage, that drops even further. This is the power of holding real sound money in a system that's built on debt. So what would have taken over 23 ounces in the U.S. alone, because that's probably how they're going to do the revaluations, country to country, to get rid of that debt, 146,000 takes not even 6 ounces of gold to pay that debt off. And after all, who knows more about what they're doing to the currency than central bankers do? And frankly, money printing is the only tool that they have left. So here's the long-term trend of central bank gold buying: decades of accumulation, decades of preparation, decades of quietly shifting from fiat reserves to real reserves. Central banks don't buy gold for decoration, and they don't do it because it's historical. They buy it because they know what's coming. And here's the recent acceleration: record purchases, record demands, record accumulation. Central banks are not waiting for the reset that they're preparing for. They are preparing for a reset. Make no mistake about it. There's no other choice. And the question for you is really simple. Are you positioned the way they are? Because when gold is revalued to its true fundamental value, the number of ounces you hold will determine how quickly and how completely, frankly, you can eliminate your fixed rate fiat liabilities. The Federal Reserve has already acknowledged the possibility of official gold revaluation, and it's not just in theory. Both in the U.S., in Belgium, and many other parts of the world, they are openly discussing marking gold to a higher value to strengthen their balance sheet. How about to pay off that unpayable debt? And why does that matter? Because revaluing gold is the only tool that governments have that repairs solvency instantly, doesn't require new taxes. I mean, it's kind of a big tax, those overnight revaluations, but they don't have to go through legislation. Doesn't require new debt because they're taking care of the old debt so we can move into a new system. And it doesn't trigger political backlash because it's not visible to you. You just wake up one morning and it's done. And when central banks talk about revaluation, it's because they know the system is running out of options. Let's look at some specifics, because the Dutch central bank governor on gold revaluation said that, the account is a solvency backdrop, and that the ECB may have to revalue gold higher than the current market price. They're admitting it. And my mom always told me this, and I believed her, and I told my daughters too, and I'm telling you now. When somebody tells you who they are, believe them. So here you've got a central banker saying that gold is their solvency backdrop. Of course it is. This is not a fringe idea. This is a central bank policy thinking. They know gold is the anchor. They know that fiat is the variable. And they know revaluation is the release valve. They have no choice about this. And quite honestly, here are 3 historical examples of overnight gold revaluations. And you can see they are not gradual, they are not market-driven, they are overnight. When the system needs stability, gold gets repriced. And actually, it's not really gold getting repriced, it's the fiat money getting repriced and all those fiat money assets. Gold is the ultimate collateral, the ultimate trusted collateral. It doesn't just protect wealth. What it really does too is it compresses time, and it turns decades of mortgage payments into ounces. And when the system resets, as it always does, those who hold real money walk into the next era, not just debt-free, but truly free, because sound money will have, quite honestly, maintained your choices and your freedom. And we can't just think about ourselves in these terms. We have to think about the world, because this is the opportunity to get redeemable gold, sound money, back in the system again. These central banks and these governments, they're not going to give up their money monopoly really easily. Why would they? They're not giving up their power. So we need to come together on a global basis, create a quiet and peaceful revolution just by converting your garbage fiat into sound money and demanding redeemable gold be back in the system again. If enough of us do this, our voices will be heard. I absolutely know it. I absolutely know that our jobs of people on this planet is to share the gifts that we've been given. You and I, we've been given the gift of sight to see what's coming. Most people haven't. So it's us that understand it that have to come together and make that difference for everybody. Be everybody's voice. And we can take our power back. And until next we meet, please be safe out there. Bye-bye.